Okay, hi everybody. This is going to be another video about a multi-project cooperative, and this video is going to be focused on income statements. Well, actually the income statement, but there are various income statements in the multi-project cooperative because each project will have its own income statement. Okay, so these numbers are fictitious. They're just to simplify the income statement so you can see it all on one screen. So first of all, you'll see that as any income statement, it'll start with revenue, and you have your cost of goods sold, and then down to your expenses. So it's starting to shape up like a regular old income statement, and you'll see that there are categories here. You have the co-op administration. Co-op administration refers to the president, co-op marketer, the co-op bookkeeper, treasurer, that take care of general administration costs for the cooperative and for the projects. And then you have projects. In this case, we're just going to have two projects because there's only so much space on the screen. There's a food truck and t-shirts. So you have two projects going on, two businesses. And then over here you have the totals of the projects. Okay, so we'll start out, we'll say the food truck made $20,000 this month, August 2012. And the t-shirts, their gross sales were $4,600. So you have a total of all the projects in the cooperative bringing in $24,600. So you see that you have individual projects, but then there's a total revenue for the cooperative. So as you can see, each project is forming its own income statement, and then the income statements get consolidated into a total. Now in the case of the co-op administration, they never make any sales. The co-op administration never makes any sales in a multi-project cooperative. The cooperative administration is only for administration. If the co-op administration was to sell a service, say consulting or something, that would break off into a separate project. And one of the members would create a consulting service for cooperatives, let's say for multi-project cooperatives. Or if the co-op administration sold, I have no idea what they would sell. Let's say if they sold advertising on the co-op advertising internet site, then that too would break off into a separate project, and one of the members would form a separate project for selling advertising to other businesses in the community. All right? So the co-op administration never has its own sales. Only projects bring in revenue. So let's move down. We've got cost of goods. So here we have the cost of goods for the food truck. Comes down to $5,230 for the month. T-shirts, $2,000 for the month. See the percentages to come over total cost of goods sold for the month of all projects. So we have the gross profit, which is the profit margin. Profit margin are these little percentages off to the side. So gross profit, $14,770 for the food truck, $2,600 for t-shirts. Total projects together, $17,370. All right. So now we go down to the expenses. We still have co-op administration, food truck, t-shirts, total of projects, expenses. Now, if there were any startup expenses for the co-op, they would go here. As the co-op is getting started, it might have a lot of startup costs. We're not going to do any startup costs in this video. We're going to keep it very simple as far as just we have two projects in business creating revenue, and they have their expenses with some co-op administration. So there's no startup, there's no co-op administration costs that are going to be dealt with in this video. But what you do see are these shared expenses of the co-op administration, these shared expenses down this column. These expenses get shared here and here into the projects. So you'll see that 170.06 plus $29.94 equals $200. And these percentages are based on these gross profit percentages. Just disregard these right there. So these are costs that are shared amongst the projects. So let's say, for example, you had an advertising campaign, and say you send out mailers, and it costs $200. And in this mailer, you are advertising both your food truck and your t-shirts. And this mailer costs $200. So the projects would share that expense. Presumably, hopefully, and usually, the shared expense becomes cheaper for each project. Because if let's say the t-shirt business wanted to do this on its own, it might have to pay $200 to do a mailer. And it's just not affordable. But if it shares that expense with the food truck, then they only have to pay around $30 instead of $200. Then it becomes doable. The food truck says, yeah, we'll take on $170 of that expense. That'll leave you with $30. That way we can both get it done for $200. That's efficient and profitable for both projects. So you can see that there are some bank fees. Those get split amongst the projects according to their percentage of gross sales. Now you'll see here that there's some costs that are project specific. So in advertising, you have $200 from a mailer that is shared. But then the food truck does $200 of its own specific advertising, so that goes here. And the t-shirt did $15 of their own advertising and some other type of advertising. So you come over here and you've got 215 is project specific, that's 200 plus the 15, and then the 200 is shared, the 29 and the 170. Total is $415 for the total advertising for the co-op. Okay, so you get the idea that there are specific costs per project and that there are shared expenses for each project. That is, the shared expenses come from the co-op administration that keeps track of these things. Okay, so as it comes down to the end here, you have your subtotal of your expenses. So you see in this, and this, and this, and this, you see these subtotals right here, this column. So this column here is subtotaling the specific costs of the food truck. This column here is totaling the shared costs, costs that it actually shared with the other projects or with the co-op administration. Same here. The t-shirt company paid $101 on specific costs for its own business, like maybe its own mileage, its travel time right here. And then here $217.49 were costs that they actually ended up sharing with other projects. Now this number here, the $318.49, that is just totaling this project specific costs and the project shared costs. Same thing here, $2,325.51 for the food truck. This is simply adding together their shared expenses with their specific expenses. And this becomes now their total expenses for the food truck project. And here you can see that the total expenses for the co-op administration was $1,453. Now these expenses from the co-op administration were transferred to the projects. See that? So they had a total of $101,453 And that 1,453 was actually transferred here. The total of the transferred costs of the projects here. So what happens now is that the operating income of the co-op administration is zeroed out. So ultimately the co-op administration has zero revenue and zero costs, unless there are startup expenses, but we won't touch on that in this video. So 1,453 were shared amongst the projects. Everything's totaled up so that now you have your operating net income, your net savings right here for the food truck. This is your net income. This is the net income for the t-shirt company. And they both add up over here to the net income for the entire cooperative. Okay, so I just wanted to touch on the very basic part of the income statement for these projects in this part 1 video. And I'll have a part 2 where I go down below and show you more. But for right now, we'll just leave it right now, this part 1 of the income statement for the revenue, cost of goods, and the expenses, and how the costs are specific and shared, how they get shared. The co-op administration sets up the amount that's going to be shared, and then they get shared according to percentage of gross profit. All right. Okay, so that's the end of this video. See you in the next video.